This video will be covering basic accounting data from a reporting standpoint. I'm not going to run every single report, but traditionally what I'm going to do is I'm going to highlight the relevant reports that most accountants want access to. And then you can play around with them. If we need to make any adjustments, we can to the reports. And then I'm going to talk a little bit about what we call the closed day inside of control. I don't believe that Julia and David and I have technically set this part up yet, so there may be a follow-up call to this video getting that configured properly. Most all financial reports are going to be in the main report menu, so reports up at the top. Then you have your financial based reports. So some of the standard reports here that businesses are going to look at is under standard accounting reports. You'll look at the financial summary. You may look at the balance sheet and the income statement. However, those reports are traditionally used by our full accounting customers. They're not very traditionally used by our customers using third-party accounting softwares. So the key one being here, the financial summary. Then you have your sales tax reports, and you have a couple different views of that, and you have some here under about exemptions. Most people start with the sales tax summary. The detail has its purposes if you're trying to find a specific transaction, but most people will start with the summary. We do have GL exports, which we'll talk about more in the closeout portion of this, but traditionally if you needed to redo a closeout or see a certain time period outside of a closeout, you can come run the export files here as well. And then we have our basic GL reports. Very helpful if you just want to see what the like a snapshot of what the GL was over a certain time period. Again, most people will stick generally to the summary. The detail adds in order information to it, but most people kind of just want to see it at the account level, which is what the summary does. And then not a traditional report outside of setup, but looking through the system, I don't think we've done this step for AssetsLiabilities. So under list, there is a chart of accounts listing report, and I'm going to run this and just leave it open here, and we'll come back to it here in a second. Some of the other reports that you'll want access to is the customers and receivables. You'll want the AR report, the AR summary, or the AR detail report. Just what's going on in your accounts receivable, what's the current status of your accounts receivable in there. You have your payments reports, so what is going on with your payments. The statement report, actually, under payments, probably the most relevant here is the first one. Maybe the second one if you're looking at it from a particular customer standpoint, and then probably deposits and voided payments would be the other two important ones. I don't see AssetsLiabilities using our credit card processing at the moment, so I don't think the other reports are as necessary. Under statements is your account statement. This would run it for all companies, but it does have a company filter on it if you want to look at it from one company. You can also run this report directly from the company on the print menu from the company video. The other reports, you have your WIP reports, so what's currently in production. Some of them do have financials, payment information, not payment information, balance information on them, so you can do your forecasting. You have your sales reports here. Generally, you have your general sales report here, but a lot of shops are going to be running analysis by different categories or by salesperson. So it's really the same report. It's sales report. We've just done some of the groupings for you. Some traditional ones are by product, by customer volume or frequency, and then those would probably be the most common unless you're using some marketing information like industry or origin. Close would be anything that actually closed out, so anything we've had payments against. Estimates, you have a couple of analysis reports by converted, by pending, by lost, and voided. So just basically by status there. If we're using time clock, we have our time clock reports as well. Actually, the reverse here, the detail would probably be the most common versus the summary here, just giving you some more order or part information of what they're clocking into. Then we have our parts and inventory reports, which is going to be really important in our inventory system. So you have your estimated versus your actual, more from the accounting and management side. How well are we doing from a system standpoint on getting an estimated time, and then how well are we doing on a production side from what we're actually using in the shop. You have some usage reports, which are really generally the same as the estimated versus actual, just grouped a couple different ways. You have your catalog and your inventory listing reports for your purchasing department. You have your cost analysis by order or by product, very similar to the estimated usage reports, just looking at it more strictly from a job perspective than maybe an overall option. You do have your inventory history and inventory status reports, which give you an idea of where you are with your inventory levels. One caution here, please do not run the inventory history report for all of time, for all of parts. It will stall out and it will severely affect your control environment. You really do want to run this report for targeted information, not for all of time. That's probably the general main reports, other than maybe your shipping department might use pending shipments and shipped by dates. However, traditionally your shipping department would probably run more off of a dashboard than a printed report. Now I know I kind of ran through a lot of those pretty fast. I do want to show you an example of your report preview menu and some of the options you have. So I'm going to use a statement as a guide. We've kind of talked in a few videos now about these option checkboxes, which are turn off, turn on things. But when you start getting into these main report menus, what you're going to have is you're going to start having options like customers, which are going to be multi-select options. So by default, it selects all, but I can come in and say that I only want to see test company, or I want to see test company and walk-in. I can add to that list and then run based off of that. So some of the filters we have in the system are based on employee, based on part, based on customer, but the multi-select works the same way. Then you have some filters here that might just be more informational. So if you didn't want it called account statement, you can give us, in this case, an alternate title for the report. You know, what days late category do I want to run this for? So traditionally, if you're running it for a company, you want to see all the categories, but maybe I just want to see what's currently over 90 days and start calling those people to get payments. So you have some drop downs that'll filter information as well as text boxes or these check boxes that can also filter information. So if I preview that report, it'll give me all the things that are due for test company. The other filter that you're looking at traditionally is a date filter. So I'll use the financial summary as an option here. And then you have your date options. So most reports are going to be set since last daily closeout, which we're going to talk about here in a second. But a closeout for control is just, it's a time period. It's a reconciliation period that you can go back and reference. So since the last daily closeout, if I closed out last Friday, and then I ran it now, then it would be any transactions from last Friday to now is the since last daily closeout. But I can choose what that is. So I can do a custom date range, meaning that I want to type in my starting and end date. I can do all, which is all of time. I can pick a standard, so today, yesterday, last week. I can choose a closeout period, so last weekly closeouts aren't really much of a thing anymore, but last daily, monthly, or yearly closeout. I can pick a previous closeout period or a prior closeout period as well, which would give me a choice to go back to my reconciliation period that I want to look up data for. So that's kind of an overview of the main report menus. Most anything that is a report could also generally be turned into a dashboard instrument as long as you know kind of the general information you want. However, from an accounting standpoint, we do have kind of 3 starter dashboards as well. So it gives you actions to a new purchase order, new order, record a payment, the quick reports, and you can see bills or open receivables. You're not in full accounting, so bills probably wouldn't be relevant at this point in time, but you can see different views of the accounting picture. You have your payables in here, so from more of your vendor side of things, and then you have your receivables, which is going to be more from your customer side of things. So those are just some starter dashboards generally for accounting, but you can build your own as well. So the reason I pulled up the chart of account listing report earlier is because I think we haven't done this step with AssetsLiabilities to this point. And generally what this report is used for is it's used to map our chart of accounts to your accounting software's chart of accounts to the best of our ability and to where it makes sense. Generally this report, if you're looking at it, the first column is our chart of accounts, and then the third column would be your chart of accounts in your accounting software. We call it export name because this is the name that generally, if we were exporting into your accounting software, we'd be looking up in there. So QuickBooks uses export name. Most every other software uses account number. I have on file that AssetsLiabilities is using QuickBooks Online at the moment, which we don't have a direct integration to, but it's still a good exercise to make sure the export name makes sense so that when we pull GL reports, accounting knows where to manually enter data into QuickBooks Online. Now, QuickBooks Online does offer third-party integrations to accept IIF files, which is what the QuickBooks desktop import feature is. It's an IIF file. If we want to explore or use one of those third-party integrations for QuickBooks Online to take an IIF file, then this is 100% important step that we need to take because we need to match those accounts correctly so the file can be read correctly. And generally what we're going to do on this report is we're just going to walk through the list. We're going to ignore anything that says do not export to accounting software, and we're going to look at the other accounts, and we're going to figure out what account in our QuickBooks that should be mapped up to. So 2 rules: we can't map to the system accounts receivable account, and we can't map to the system sales tax account as well. So generally what we do for most desktop customers is we'll create an account that says serious accounts receivable as another asset or an asset account and then import into that account, and then you can move the money however you would like around. Then undeposited funds, you usually have an account already set up for undeposited funds, so that would count for anything that's in a bank account or any of our payment groups here in our assets. Liabilities, you're looking at a few accounts. So you have your customer credits, which would be anything that you owe the customer. We talked about refunds a couple of videos back. If you have a balance on a customer account, that would be what this is used for. Any deposits would be any money taken before a job is marked sale in there. So any whipper built jobs that have taken money. And then you have your sales tax accounts. Now you have a lot of sales tax accounts. So there is a choice here. We can consolidate all the individual accounts and just send over a lump sum value of the sales tax liabilities to QuickBooks, and then you can do your analysis on how you want to pay those out individually. But then that's one account that you have to map to QuickBooks versus if you leave it unconsolidated, then you would have to tell us which each of these counties gets mapped to in QuickBooks. Neither answer is more correct or incorrect than the other. It's really just the preference of the accountant in there. So again, if we consolidate to sales tax liability, we would have an account here, and then all the sub accounts would just roll up into one number getting sent to QuickBooks. The second option would be that we map each individual account separately. And I just double clicked into that report, so let me run that again. Apologize. And then if we move to the second page, because you have a lot of liabilities accounts, we'll have the rest of those in there. Then the next grouping is our income accounts. So again, this is kind of the second place we have a choice. We can do a consolidation on the folder and just send one income number over to QuickBooks and then use control to figure out where profitability was. Or every parent product in the system can have an income account. And the main issue there is that anything that is a child is generally rolled up into the parent. So if we're looking at a digital print, the lamination, mounting, cutting options, while they could have their own income accounts, in a lot of businesses it doesn't make sense for the sub processes to have their own income accounts. So it may make sense that digital prints and vehicles have their own income accounts, but depending on how far you want to take that down the line, we can definitely have a call and discuss where that makes sense to have that options. So again, similar to sales tax, we can have one account that just rolls up all our sales totals into QuickBooks, and then you can use control for various income analysis as far as what products are selling what, or selling best or worst. Or we can have each income account go into QuickBooks separately. Our third page will have some other income accounts. Now, traditionally, this one is rolled up and just sent over as one number to QuickBooks. The three accounts that make it up are credit memos, finance charges, and order rounding. You don't traditionally, particularly at start, have a lot of credit memos or financial charges. It also depends on the business whether you use them at all inside of control. And then order rounding is an interesting account that taxes and some values can technically create half of a penny or a fraction of a penny. Order rounding tries to hold on to all those fractions and halves and then rolls them up into a penny and sends them over when that's relevant. And then as far as our expenses, we're really looking at three accounts. We're looking at donations, which is more of your barter trade type payment method. In there, you're looking at write-offs or your bad debt account as far as writing off a job that you're not going to receive payment for. And then credits given is the off-balancing account to customer credit balance, just showing that we have those credits in balance from the job perspective. So we probably should have a call with accounting or whoever, maybe if you need additional information on that. If you are good to make those connections yourself, you're more than welcome to. Traditionally, what happens is in setup, accounting setup, in your chart of accounts, for each of those fields that we just talked about, like your accounts receivable, there's an account here or a label here for external account name. So whatever name this should be in QuickBooks, you would just come in and you would type that name exactly. Now, I'm a big fan of copy paste because it does need to be an exact match, but you can type it in as well. And then you would save it. I'm going to cancel this really quick because I don't want to commit you to that name. And then in the case of say like our sales tax liabilities or our incomes, if we want to consolidate, then what we would do is on the folder, we would say consolidate sub-accounts, and then we would tell it what account in QuickBooks that consolidation is going to. Versus each count, you would come in and set what external account name it is set to. All that to discuss what we call the closeout. And the closeout is under Quick Reports. If you click on the button, it'll open up the queue. Quick reports is really just groupings of reports that we commonly run. So it's even helpful outside of the closeout if you have a lot of reports that you're running over and over again that you want to use in a batch capabilities. That's really what quick reports is for. But for most businesses, it's really just the closeouts. And so we have a close day, a close month, and a close year. Close day, even though we call it a closed day, you can run it twice a day, you can run it once a day, you can run it once a week. We generally recommend at least once a week and any time before you make a deposit to the bank in there. And all it's going to do is it's going to run three main reports for you, which was the financial summary, the payments, and the sales report over the time period. So again, if I close out last Friday and I'm running it today, it's any transactions from last Friday to today. It's going to give us whatever our GL report or printout is going to be. Now you're using QuickBooks Online, so it may be this report, which is the IIF file if we're using that third-party integration. If we're not using that third-party integration, we'll swap it out for a printout version that's nice, neat, and concise so that the accountant can make the manual entry into QuickBooks Online. Then it'll have a close day, which is a timestamp. It's just a date and time in which you've kind of closed the GL for the period. And then we back up the database. And I know I've made this point to David recently that we don't keep a copy of your data locally. We're huge proponents of backups and having a backup plan. And doing the closeout is one of the best ways to make sure that you're automating that backup process from the controls side. The close month is going to be very similar. The close month is going to be the financial summary, the AR summary, and the sales tax summary, and then a close month timestamp. And then close year would be your yearly financial summary, your yearly taxes, and your close year timestamp. Now, doing a close year does not automatically do a close day. So if you're at the end of the month, you're going to do a close day, and you're going to do a closed month. If you're at the end of the year, you're going to do a close day, a closed month, and a close year, pending that you do it on the traditional end of month time frame. Traditionally, what we would do with the closeout process is we would run through the first one or first couple, depending on how much the accountant wanted us to be involved. But to trigger it, you just simply hit print. It's going to ask you, what do you want to do with the first three reports? Do you want to preview them, print them, email, or save them? I will preview them. I don't know that we'll really have any data here. It'll generate the export file for us, and where do we want to save that? It'll ask if we want to close the day. Traditionally, you will say yes. I'm going to say no. And then same with the backup. Do you want to create the backup or do you not? You want to say yes. I'm going to say no, just to not generate a bunch of content on your server at the moment. But we get our daily sales report, so anything that was marked sale during the period, sale or closed during the period. You have your payments, so any payments that were taken during the period. And then what does your financial snapshot of the period look like? So what were your assets, liabilities, income, and expenses at during that particular time frame? So that is a quick snapshot or overview of the accounting side as far as reports goes. In the orders video, we covered how to take payments. In the company video, we cover how to make adjustments to customers' accounts, such as payment terms and sales tax for their account. But if there's any additional questions, please let us know. If there's any additional reporting that we need, please let us know. Traditionally with custom reports, we do try to see if there is a report close enough that we can use as a starting balance for the report, just to save you time in the report customization. So if there is a report, say like the sales report, it's almost the way you want it, but it'd be really great if this column was on here versus that column. Then we want to know what that report is, and we'll make that swap on that report file versus having to create the report for you from scratch in there. So if there are any questions, please let Julia or David know, and we'll get you an answer. Thanks. Have a great day.